Hello, everyone. I'm your host, Cynthia Wenz, welcoming you to another episode of SLB New Energy Conversations. As we all know, achieving a sustainable and decarbonized future requires strategic investments in innovative solutions. Corporate ventures play a crucial role in identifying and accessing clean tech innovations and accelerating these technologies while managing risks effectively. New technologies are essential for driving the energy transition and industrial decarbonization at scale, and innovative ventures help on bridging the gaps from challenges to solutions. Helping us explore this innovation landscape today is Arindam Bhattacharya, SLB Corporate Ventures Director, who has extensive expertise in new technology investments with a strong focus on the new energy industry. He has been instrumental in identifying and investing in clean tech innovations, forging partnerships with these innovative companies to ensure they are adequately de-risked for market adoption. Welcome, Arindam. How are you?
I'm very good. Thank you, Cynthia. Thank you for having me.
So great to have you with us today. Love to jump right in. We have a lot to discuss.
Sure.
Let's just start with the basics. Can you give us some background on corporate venture investment program in the new energy context?
Sure. Absolutely. So, let me take a step back. When you talk about innovation access in any large corporate, there are typically three ways to go after that. Okay. Companies like ourselves, we do a lot of organic R&D in areas where we are very strong, which is our core business. You can go after mergers and acquisitions, M&A of mature targets, companies whose technology and innovations you want to be part of your portfolio. The third area is corporate ventures. So corporate venturing, companies typically do that when they're trying to access external innovation where either it's a wide space for them from a business strategy perspective, or it's an area where there's some complementarity and there is some potential future growth, or could be it could be an enabling technology for part of their portfolio.
Right.
So in SLB, there's a history of corporate venturing. It goes back to about 2008. We started corporate venturing on enabling technologies for our broader core technology and services portfolio. Did that quite successfully, I would say, over a period of time in terms of bringing in some new ideas, innovations in. When we launched New Energy in 2020, there was a pivotal change in terms of how we looked at corporate venturing. We became extremely strategic about it. We became very intentional in terms of how we go after things, and we became very much business and strategy driven. Okay, so that was the big difference in terms of pre-2020 and post-2020. If I kind of compare the landscape,
Sure.
we essentially went after investing minority equity positions into startup companies that were important for our strategy, collaborating with these companies, helping them grow through our expertise, but at the same time, bringing their technologies into our businesses and building solutions around those technologies. So it's kind of a combined journey of collaboration, working together with these companies, but it starts with the investment, which is driven by the corporate ventures team. And there's a lot of internal teamwork that's involved in this with the business side, because obviously it's very much strategy driven, but also with the technology team, because who are really
Sure.
instrumental in this.
So when you talk about this shift, was it motivated by maybe the market opportunities, or what was it motivated by?
Good question. So it was motivated by the fact that we launched New Energy as a business. It was a new area we were going into. So we were essentially expanding SLB's technology footprint from serving oil and gas to serving the entire energy mix. As we entered into these new areas, we realized that there were the innovation required some capabilities, and innovation required some areas of work that we were not usually exposed to. Okay, and while we had a focus on top-down strategy in terms of looking at the market spaces and starting to understand what was important for us going forward and how we should participate in these, at the same time, corporate venturing allowed us a bottoms-up access to see technology trends in these spaces. By participating in these companies or sitting on the boards of these companies or working with these companies, we had visibility into the value chains, the other stakeholders, and learn a lot more insights about these spaces. Okay, so entering new energy was really the trigger point, if you like, in terms of why we needed to make this change.
Why are corporate ventures important for accelerating clean tech innovation and de-risking?
Right. I think clean tech innovation is, technology innovation in the clean tech energy space is very much hardware driven. It's complex. There's a lot of chemicals, chemistry, process, or electrochemistry. There are some capabilities involved in that which are quite complex. The scaling of these from a concept stage in a lab to a field-worthy product that is working in the field, that's a long journey, a lot of risk, and this has to be de-risked in stages, and there's a lot of collaboration needed in that. Startup companies typically are very good in the first stages of launching that conceptual product, and then sometimes they end up underestimating the amount of risk that there is to become a field-worthy product, or to actually, de-risk the successive stages of pilots and demonstrations to get to that commercial stage. So this is where corporate venture groups can bring in the actual expertise from companies like SLB, which is what we've done in this case. We bring in the actual technology de-risking process or the technology scale-up process. In SLB, we have a very robust process called concurrent lifecycle management that we apply in technologies that we develop. Having that framework available to a startup company to scale up their technologies and de-risk is huge. Yeah. Okay, that's one thing. And the second thing that we are able to bring is really our global footprint. So for a startup to be able to access a footprint in 100 countries with, tens of thousands of field people who are ready to go, boots on the ground, deploy technology, support it, that is, humongous. Okay.
Yeah, you're like the Shark Tank for the startup.
Correct.
With the exposure. Yeah.
Correct.
And the reach.
So that's why CVC investments are so important when it comes to the actual climate tech world. Probably moreover than some of the other sectors where CVC investments take place. So we really help kind of roll up our sleeves and help de-risk these technologies and these businesses and make them kind of commercial. So that's what we're able to do.
So what about identifying the key factors when you're considering clean tech opportunities? What are the key factors that you consider to identify those?
Yeah, a great question. This is obviously a huge space, lots of companies. How do we really, it's sometimes like finding the needle in the haystack. How do we find that? I think the first step is, as I said before, we're strategic and intentional. So the first step is really finding those companies that are aligned strategically to what we're looking for, okay? And that involves kind of looking at the impact of the company, the market that it serves. Is it aligned to the three verticals that we have inside of New Energy, the businesses that these verticals are chasing, which is industrial decarbonization, renewable energy and efficiency, and critical minerals? So that strategic alignment is the very first check mark, okay? Once we see that, yes, there is some strategic alignment, then we go and look at four factors. One is the TAM. We call it the 4 Ts. One is the TAM, which is the market that this addresses, okay? Is it meaningful? Is it material? We're a large company, so we really want to participate in large markets. Second thing we want to look at is the timing on the technology side. Is it too early? Is it too late? Sometimes being too late being late is not a bad thing because you get to learn from the front runners. Being too early can be a problem because you have to keep investing a lot of money and the market's not ready for you. So that timing part is really important. I think the third thing, obviously, these are all kind of in parallel. We're looking at the technology is fundamental in the sense, is it really differentiating? And in this stage, we're looking at not like 5%, 10% increments. We're not looking at incremental improvements on the incumbents. We're looking at multiples of X. Is it 2X, 3X? Okay, so factors of magnitude improvement. That's the level of disruption we look for. And then finally, extremely important, the team itself. Is the team capable? Is the team credible? Do they have a history of having done things like this? Do they have a history of working together? Are they willing to work with others? Are they willing to build kind of collaboration efforts? And do they have what it takes? Is the team sufficiently diverse enough to take this? How far can they take this? Can they take it all the way to commercialization, or the team needs to be kind of strengthened? So these are 4 things we look at. And one final very important thing is, who else is investing with us? Okay. Are there investors who are going to hold the company back? Are there investors who share the same strategic goals as we do? Are there investors who are complementary to us? These are all questions we asked ourselves, right? So strategic intent, the 4 T's, and then who else is on the cap table. So these are some of the factors that we look at. We do very strong due diligence on as we go through this.
And how can corporate ventures balance the agility of a startup and the robustness of SLB in clean tech development?
Yeah, so this is quite fundamental. I mean, when we invest and we collaborate, we're obviously trying to build a win-win situation over here. And this balance between agility and robustness is really important. At the very early stage of a business, agility is important because we're very quickly trying to work through the prototypes and the lab prototypes and the early pilots and, try, test, fail, go back again. You can do that still because you're working within a smaller environment. But then there is a process, as I said, what we call the CLM process. That process has milestones along the way and check marks along the way that's stage gated. So that adds robustness to the process, besides all the technical capabilities and expertise that we bring. If we don't balance the agility and the robustness properly, then either we are too slow to the market with the product, or we introduce errors and mistakes in the early stage that then get amplified as we go further down the road. Now, remember what I mentioned, that clean tech innovation or clean tech technology innovation is really hard. And that's because the products that we're trying to make are generally expensive products that become part of CapEx intensive projects. And these products, if we're building a pilot or a demonstrator and we haven't sufficiently de-risked it or worked out the errors, and those errors amplify, and we find out that the pilot is not working within the envelope it's supposed to, redoing that is very costly. Going back to the bench and working through that and coming back again. And that's what we want to avoid. And that's why the robustness from the early stage is really important, despite the fact we also want it to be agile. So we on the corporate side are looking for agility. The startup on the other side is looking for robustness from us. And that's where we're complementary.
So you mentioned the demonstration project. What role does a corporate venture partner like SLB play?
Yeah, I think on the demonstration projects, when we get to that stage, by that time, technology has been de-risked up to a certain point. It's an intermediate step to getting to commercial scale. So we need to kind of build out these demonstrators to kind of be able to, in a tangible way, show customers and other partners how this technology would work. And in that process, there's expertise that we bring in terms of larger scale engineering, design, feed studies that need to take place for that, manufacturing of certain things, or supply chain support. HSC and operational support, extremely important. Sometimes the early teams are not really fitted with sufficient operational knowledge to be able to work out some of those operational risks that they're going to face. So there's a significant amount of change management involved in that. So all of these aspects, okay? And typically what we do is we would roll up our sleeves, assign resources, work with the companies in doing these things. So a couple of great examples from our portfolio. One is on the energy storage side, one of the startups we've been involved in since 2021. We worked with them in helping their supply chain process in getting their demonstrator worked. And their demonstrator has been operating now for close to 12 months. And it's an energy storage system. They're putting electricity on the grid, being off-taken by a large utility. And that's a fantastic example that customers from everywhere have come and seen, and they're now ready to go on to the next step. Another example of a company in critical minerals that we've been working with since 2021, once again, we went ahead and built the demonstrator, the pilot, proved the technology, proved the entire flow sheet, the technology as part of that flow sheet, and in how we can really optimize the entire production of lithium in a sustainable way. So it's a couple of examples on how we have participated very effectively in successful larger scale demonstrators.
Great examples. And of course, navigating market dynamics, especially in an ever-changing industry like technology and energy, is crucial for success. So how should corporate ventures approach this?
Yeah, I mean, we have to recognize that we are in a market that's evolving fast. There are new innovations, new technologies coming up, but at the same time, we're also impacted by whether it's commodity prices, geopolitical changes, regulatory changes in different parts of the world. And we work globally, which means that we're not just exposed to this here in the United States, we're exposed to this everywhere in the world, in every corner of the world, where we are trying to roll out some of these new energy technologies and businesses. So being aware of the market is really, really important. I'd say combined with the market intelligence we're getting from our team who are globally situated and the strategy team who's constantly looking at how these are evolving, what corporate ventures can really bring is the bottoms-up approach, in the sense we're embedded into companies that are working in these diverse markets. We are sitting on the boards. We're helping these companies being governed. We are oftentimes on the same board with people who are our customers, the corporate venture arms of our customers or of our suppliers, or sometimes the DOE or government regulators, etc. Right? So through them, we get firsthand information on how they're seeing the market. So it's an active conversation taking place all the time. We also participate as an investor in a fund that we made as a strategic choice. And in that fund, we have several utilities and industrial customers who are participating as investors as well. So when we're sitting in a room and there's 50 people around the table, from them we're getting real-time market input as well, voice of the customer and how the market is evolving. And we bring all of that back into the S&E core team, and we have constant discussions and evaluations about how is the market moving and how should we be evaluating our portfolio with respect to that, to make sure that we can be agile to the market changes. So it's absolutely important, not just from a technology perspective, but from a strategic perspective as well.
So finally, what is the key to making a clean tech ventures technology successful in the energy sector?
Okay, so I have a phrase when I work with kind of startup companies that I tell them, like, especially when they ask the question, how do I become a commercialized product at the end of the day? And what I tell them is, you have to make this shiny, new, exciting piece of technology that you're very proud of boring and run-of-the-mill. Okay, so make it boring. What do I mean by that? And that has a very big financial and business connotation. The technologies we are investing in, the technologies we're building, these are going to become part of large capital-intensive projects. The people who are developing these projects, our customers, they are going to have to finance these projects. And within that financing of those projects, they'll be not going into too much details, but there will be debt and equity stacks in that capital structure. And especially for the debt, the people who are going to be financing that debt, they look for bankability. So debt is essentially, these companies need to make the technology mature to the point where it can enable these projects to attract the lowest cost capital into these capital stacks. I know that's a financial point to get around, but unless the technologies are driven to the level of maturity, to the point of being boring, where a bank can put in debt capital into that capital stack to make that project, okay, when that is happening, that means they're satisfied with how much the technology has been de-risked. So it has to be de-risked to that point. Okay, and that is when it reaches bankability, when it's backed by a strong technology company standing behind it. Okay, so this is where I talk to startups and I tell them, look, collaborate with us Because if we work with you, we can de-risk it together, take it to that point, help it become a bankable product, not just from the point of view of performance, but also because SLB has been part of this journey. SLB has the credibility to provide bankability to that, okay? And I think that is needed for companies like ourselves, bringing our expertise to make these technologies bankable, obviously as fast as possible, so that these large projects can take place. These large projects can then get executed. And that's when we're going to start seeing a shift in terms of the business and what we are looking for, right? And that's the journey that we are all on, making things boring.
Boring and bankable.
Yes. There are, just to kind of add to that, there are 3 technologies that are boring and bankable today: solar, wind, and lithium-ion batteries. Those are the 3 technologies in the energy sector. And people who are on the early part of the journey needs to look at these industries and see, how did these become bankable? Why do investors not ask questions twice about putting money into these projects? Okay. So that's the journey that we need to have these technologies on.
Thank you so much for sharing your insights with us, Arundam. Truly grateful to talk with you.
Thank you.
Really enjoyed the conversation. And thank you to all of you listening to this episode of SLB New Energy Conversations. Be sure to follow us to hear more from SLB's diverse team of changemakers and experts in energy transition. See you next time.